I'm sorry, you can't hold gold without Bitcoin. I agree with that. But that I just look at that gold Bitcoin ratio. Trend's down, and there's good reason for it to keep going down. I mean, gold outperform. I'm sorry, it's a Bitcoin gold ratio. It's a good reason for gold to keep outperforming, but we can keep going there. It's just let's never underestimate the human nature. Human nature will never change, and we're still at that stage where there's a lot of crypto people are just so bullish and so long, and this is a bear market.
Mike McGlone is a senior commodity strategist for Bloomberg Intelligence. In this video, Mike McGlone is predicting crypto traders are going to start funneling their wealth into a non-digital asset due to a looming recession. In his interview, McGlone says that the bear markets are likely not finished and crypto traders will probably start moving their investments into gold, which tends to increase in value during recessions. Crypto traders are about to FOMO into this asset, says Bloomberg analyst Mike McGlone. In his tweet, McGlone mentioned that, is Bitcoin gold the canary in the coal mine? The disparity of gold outpacing Bitcoin may be regaining fuel, with implications for risk assets and deflation. Up almost 10% on a year-over-year basis to May 12, the precious metal is a top-performing major asset. McGlone predicts that crypto investors will turn to the precious metal gold as a safer store of value. He previously said that gold will likely perform better than Bitcoin during the possible coming recession. As per McGlone, Bitcoin-gold ratio may be telling for what's to come with the U.S. recession. The crypto appears vulnerable versus the precious metal. If the worst isn't over for risk assets, Bitcoin may lead the way lower. According to McGlone, Bitcoin could pace declines for risk assets. If the worst isn't over for risk assets, Bitcoin may lead the way lower. Before proceeding further in this video, make sure to hit the subscribe button below for recent updates about crypto market.
I fully expect that Bitcoin is going to trade more like gold someday in treasury bonds. But at this stage, you want to be like that much when it's oversold and it's trading below 20 and a 19, 18 handle, but not when it's bouncing up near 30, getting overbought, and the complete consensus, oh, we're getting a halving and the worst is over. The things you learn when having been with customers your whole life and sniffing out markets is you don't want to get bullish a risk asset in that environment. It's still very much a risk asset. I mean, let's look at Ethereum. I look at the Bloomberg Galaxy Crypto Index. Very much risk assets. And hopium, expectation they will trade more like gold and long bonds someday, but not yet. And to me, this is where we are now, where we're at that stage now. As the next shoe to drop is showing it's happening right now. We're seeing that almost 4% drop in Bitcoin today. We're seeing it just can't get above 30. Ethereum just can't get above 2,000. And the key thing is when you take money out of the system, I mean, I'd say NASDAQ it simply drops another 10%, S&P 10%. That money is going to come out of the highest speculative risk assets. 24,000 cryptos are still indicative of epitome of speculation. We're going to look back in this and say, okay, that was kind of like the stock market in 1929. Yes. So to me, that's where we're right now.
Recently, McGlone tweeted that a key shoe to drop for significant deflationary indications from markets on the back of falling commodities, bank stocks, and U.S. Treasury bond yields could be Bitcoin. Introduced in 2009 and ballooning to about 24,000 cryptos. Bloomberg strategist warns of an impending recession. We're going to see a bear market. McGlone believes that the bear markets are not yet over, and as a result, traders will likely shift their focus to gold, a traditional safe haven asset that tends to appreciate in value during economic downturns. McGlone mentioned in his tweet that trends recession could favor gold as Bitcoin momentum, and the tilt toward a U.S. recession may give gold an advantage over Bitcoin in 2023, notably if the stock market declines. The metal moving upward versus declines for the crypto is the current trajectory on a 100-week basis.
So that's been the key thing. We're doing that in Bitcoin and Ethereum and the exact same thing in the most significant asset measure on the planet, the S&P 500. It's still got a 4 handle on it. I think it's going to go 4 offered and head towards 3. But and that's the key thing that I really enjoy listening. Dave gets is having lost a lot of money in bear markets and made money too. Bear markets don't end like this. I just don't see that. They end for not months of pessimism, but years of pessimism. And that to me is what we're heading for, particularly something like this that has 100 years of foundations behind it. And so a key thing I wanted to go over a little bit is the gold Bitcoin ratio. Here's my prediction of the future that fully expect people to throw me down the mat on it if I'm wrong, but I think this is what's going to happen. People from cryptos are going to FOMO into gold for a while. It's overdue for that. It's just sensing the way I see in the market, sensing all the speculative excesses. They're going to realize, okay, I've made so much money. I can get 5% or so in a T-bill, 4% a 2-year note, lock it in, bear market kicking in. There's a lot of excesses in here. And this thing that we call boomer rocks is going to be self-fulfilling. I think every day that stays above 1,000 goes higher. Just the way human psychology works. People are going to say, all right, I got to get some of this gold stuff. And that to me is just what's starting to happen. Bitcoin holding those levels, Ethereum holding the key levels, starting to trickle down for good, solid, fundamental, speculative, excessive reasons, and gold going up for good, solid, fundamental reasons. The key point is the price of gold is almost the same as it was 10 years ago. This is the first recession for most crypto traders, and that's most crypto traders have not lived through pure good bear markets. I mean, they think they have, but I mean, ones where the stock market's going down, where you're losing money and the Fed wants you to lose money. This is the case where we are right now. The Fed wants the stock market to go down. That's my interpretation. And they wouldn't be raising rates into this environment they were. So to me, this is what's going to happen. We're going to see FOMO into gold. We're going to see a bear market to resume in cryptos, just the bounce.
He has forecasted that cryptocurrency investors will seek refuge in gold as a more secure means of storing value. In an earlier statement, McGlone had indicated that gold would potentially outperform Bitcoin in the event of an upcoming economic recession. McGlone anticipates that investors in cryptocurrencies will view gold as a safer and more stable store of value. Specifically, McGlone highlights the gold/Bitcoin ratio as an important factor in this shift. He stated that bear markets typically do not end abruptly but rather persist for an extended period. Bitcoin holding $30,000 ceiling may help fuel gold above $2,000. Crypto enthusiasts who refer to gold as boomer rocks may fall by the wayside with the metal as the U.S. leans into a recession. Optimism that there will be a soft landing and that the worst is over.
What's happened with GBTC this year? And I'm not pointing out bullish or bearish, but it's up about 94% this year. And I've had people last year point out, oh, that's pretty damn cheap when it was at 50% discount. And if you hedge that versus futures, they're only up 70% this year, Bitcoin futures. Obviously, you got to roll them. But to me, that's still an ongoing trade that's going to continue and probably work in favor of Bitcoin. But it's the tree, and it's the finance is just still part of that ongoing. What I say is still, this is still a bear market. And it's a lofty one. But so let's look at an example. When did Bitcoin reach that recent high around 30,000? Right during consensus. Oh boy, here we go. What do we do in Bitcoin next week? What happens after Bitcoin Miami next week? This leading indicator, I just respect it as leading indicator, and it's telling me that your bigger problem is the macro, and it's a tree in that forest.
McGlone predicts a recession is coming and crypto markets will suffer as investors are also likely to turn bullish on treasury bonds, which are experiencing increasing yields. McGlone expressed confidence that Bitcoin would continue to outshine other digital assets. According to McGlone, cleaning out speculative digital currencies will ultimately benefit the crypto industry as a whole, leading to a more legitimate and stable market. Do you agree with Gareth's Soloway perspective about gold-Bitcoin ratio? Will gold outperform Bitcoin in the period of upcoming recession? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.